Hi and welcome back to Cheeky Crypto. My name is Nick.
And my name is Chris.
And today, guys, we're going to be talking about how to become a millionaire in a bear market. Everything from what a bull run is to a bear market and strategy and everything that is involved. As we get into this video, if you find it useful and informative, hit the like button. We really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Now, if you haven't yet joined us in Discord, Chris, what do they have to do?
Well, you have to join us, right? Because you can have more meaningful conversations with us. We chat with you guys in some of the actual team meeting sort of areas that we've got on Discord. And we've also got our Patreon service as well, where we've got 2 weekly AMAs where you can ask us anything, have some more engaging conversations with us on the Discord. Link is in the description, free to join.
Excellent. Right, let's waste no more time and let's jump on down into the desktop and really get into how to become a millionaire in a bear market. Okay, guys, let's get into the first section. So ultimately, we're going to be talking about bull runs. What is a bull market or a bull run? Essentially, both those terms are actually the same. A bull market or a bull run are basically just one of the fundamentals of economics. And that is that there's an increase in price when demand outpaces the supply. This rule applies to all commodities, assets, and consumer goods. When demand is greater than the supply, specifically in the crypto space, we enter what is called a bull run. But let's actually dive into a little bit more of the detail. What causes a bull market or a bull run? Essentially, I've actually just covered it right there. In the nuts and the bolts of it, it's essentially when the demand for a cryptocurrency asset outpaces that of the supply. So basically, if we have supply that continuously decreases and demand that's increasing, the price of an asset will go up. And it's the price of the asset going up that essentially is what is determined as a bull run. Okay, so obviously it's really important that we understand that essentially market capitalization doesn't actually matter too much for the purposes of price discovery or the price pushing up or price pumping, however you want to look at that. It all comes down to very basic fundamentals, which is that the demand has to outweigh the supply. Okay, so if we really think about what causes the bull run, essentially it's as simple as that, right? We have an increase in the demand and a shrinkage in the supply. Now, it obviously works the other way when we have a bear market, but I'll leave Chris to talk about that in a moment. So when a bull market starts, so when does that bull market start in crypto? Essentially, it actually starts at the end of a bear run. Okay, and again, you start to see this imbalance between the supply and the demand. It all essentially comes down to what humans believe is undervalued or overvalued. And we can obviously go into a lot of technical detail on this, but essentially, if we're really simplistic about it, during or the start of a bull run, you start to see demand increase. Not massively to start with, there's usually a bit of psychology to it, but it starts to increase more than what you saw with the bear run. And essentially what you actually end up with is the supply getting shocked a little bit, and you actually start to see a lift in the actual price of a cryptocurrency. It should generally start off relatively slow, but it gets more momentum as basically the demand increases. Okay, and obviously as that supply dwindles down, as obviously there's a lot of buying going on, you actually start to see the price rapidly move to the upside. So if we were to really break that down, when does a bear market or a bull run start? It starts basically at the end of a bear market, where you kind of see the demand or the selling pressure, decrease and actually start to increase. So as buyers start to come on in here and you start to see more buyers than sellers, you actually tend to see that as the point of the starting of a bull market or a bull run. So the last question I guess I want to cover in this section of the video is, are we in a bull run or a bull market? Are we in a bull market? And this is actually a relatively complex question. In the traditional finance sector, it's actually quite straightforward. As soon as you drop down 20%, you are technically in a bear run. And if you start moving on up from there and you start seeing the demand increase, you actually start to see again that 20% threshold or so, you actually can classify things in a bull run or a bear market. Here in crypto, though, it's a little bit more difficult. We don't have that kind of level of standardization, heavily, unregulated market that it is as well. So essentially what we've got to do is we've got to think a little bit differently here. We obviously have a small set of data to kind of look back on, and they're not really giving us a huge amount of steer as to what is going on. Now, for Bitcoin, specifically the daddy of crypto, the one that's leading the pack, historically speaking, you were talking about an 80% reduction from the previous all-time high, and that's always been the bear market low, and then obviously from there you start to see a reversal to the upside. But essentially, if we break down, as we were just talking about, a bull run, what do we actually see in terms of that demand? Well, at the moment, I don't think the demand is really there to be classifying Bitcoin as a bull run. But I do think that is likely to come around very, very soon. So as soon as we actually start to see the demand outpacing the supply, which I think is actually just around the corner, then I think that is really when we can start classifying Bitcoin as in a bull run. Now, it's very clear that the altcoins are not in a bull run, but for Bitcoin, it's a little bit harder to see. It definitely isn't following the history very well. And I think the bear market is actually coming towards a bit of a bottom. So I think the bull run is due to start any moment now, but timing is very, very hard to get right in the space. But Chris, we'll let you now take over from a bear market perspective.
So Nick and myself, we talk about building generational level wealth all the time. It's kind of the strap line for this channel, and you build generational level wealth in a bear cycle or a bear market. I get asked the question a lot, what is a bear market? And we'll come on to that in a moment. We'll dig into the details behind all of that. But ultimately, now is the time to be making sure that the projects that you're invested in have roadmaps with dates. You got to be keeping an eye and being heavily engaged in the space currently, making sure that the teams are held accountable for the milestones in their roadmaps. I think that is so important, to keep an eye on. You got to do all your research in a bear cycle or bear market or crypto winter. This is the time to be getting in. Nick and myself in the previous bear cycle managed to get projects at like 0.5 cent, Matic at 1.5 cent, Harmony at 0.5 cent, ADA at 5 cent. Like the list goes on and on and on. And ultimately, we're going to see cheaper prices than we see today as we come down further. I believe that we are in a bear market at the moment, and we'll come on to what a bear market is in a moment. But ultimately, this is an opportunity. If you're watching this video, make sure that you're engaged. Join in our Discord. Link is in the description of the video. And I think it's fantastic. This is the opportunity that people were wishing for in the bull market, right, when the prices were sky high. So let's come on to what is a bear market, right? A bear market, traditionally speaking, is a market that is experiencing a prolonged price decline. Now, I think when we look at the crypto space, I think we can safely say that we have been experiencing a prolonged price decline alongside many other markets, right? So I think we are seeing this, and I think if we look at altcoins, we can safely say that we are now in a bear market for altcoins. Questionable for Bitcoin, but we do believe we've got further downside. And ultimately, traditionally speaking, it describes a condition in the space where if we use securities, for example, the prices fall 20% or more. Now, in the crypto space, you're really looking between 80 and 90%. We have seen that on an awful lot of altcoins now, maybe not so much for Bitcoin, but like I say, I expect further downside. So, what is a bear market? I think that is pretty much the best way to articulate it to you guys. Now, is it a good time to buy in a bear market? So the average bear market lasts long enough that gives investors plenty of time to go do their research. It gives you plenty of time to dollar cost average into the market. It gives you enough time, if you're working 9 to 5, to put enough funds into the space in order to build that generational level wealth. Also, being able to trade in many other strategies, and I'm sure that we will link a write-up in the description of this video, so do check that out. So, for me, bear market is, ultimately something that we as investors, particularly retail investors, should be making the most of. And we'll move on to the next section where Nick will talk about strategies.
Okay, guys, let's jump on into the next section, which is all about strategy. So why have a good crypto strategy? Well, a good crypto strategy is incredibly important in the crypto space. It's kind of setting the foundation of how you want to proceed. So it's very important that you have a really good strategy for crypto before you really get too involved in the crypto space, right? So I know it's really, I guess people generally are really excited. They want to get in there. They want to buy up their assets, they want to hodl it, and they want to take part, they want to participate in this space. I mean, that's fantastic. However, we do need to have a little bit of control, and we need to have a little bit of strategic thinking up front, because what we need to do is we need to ascertain how we want to proceed in this space. So during these kind of downward spirals in the space is actually a really good pivotal moment for us to actually review on what is actually going on in the crypto space, but also to start to actually develop a good strategy about how we want to interact with the crypto space going forward. So this is actually a prime time to really kind of anchor in and anchor on to your strategy, refine any kinks, and then actually refine it sort of going forward into 2022 and 2023. So, what is a good crypto strategy? And there are actually many different crypto strategies out there. And Chris actually did a whole article on our Medium, talking about the different kind of strategies that are out there. But essentially, what is a good crypto strategy? I believe that a dollar cost average strategy is a very good strategy. It's a good crypto strategy for beginners, and it's something that's really easy to actually deal with, right? So when we start thinking about dollar cost averaging, the whole mission is to slowly buy up an asset gradually over a period of time. That might be over a month period, it might be over a 6-month period. But basically what you're doing is you're buying a downward trend, essentially. Okay, so as the price of an asset goes down, what you want to do is slowly buy up that asset, usually on kind of the more steeper pullbacks. There isn't really a rhythm or rhyme to it. Essentially, you're just going to slowly ladder your way into the market. And what you're doing here is essentially buying an asset, and you're lowering your average price as you continue to buy the dip, which is another terminology that gets thrown around quite a bit. So if you're dollar cost averaging, as that move of the crypto asset moves down, your average purchase price becomes lower over time. This is a good strategy to have because it means you don't have to worry about timing the bottom of a market. You can just lower the average price that you've paid for an asset, and then you can see the appreciation over time as well. So we often say that a good crypto strategy for beginners is basically to dollar cost average. Now, this might not necessarily be the best crypto strategy, but it is definitely a strategy that has, I guess, really benefited a lot of beginners in this space. It's quite easy to do. It doesn't really require any technical know-how. And all you're really doing is basically saying, we're in a downward trend. I'm going to slowly dollar cost average over the next period of time. And my average price should hopefully, be a decent level that I can then see really good gains going further forward. Now, you could, of course, calculate this out, but most retail investors don't bother. They generally just dollar cost average, as in they buy a little bit here and there, specifically as we kind of trade sideways or go down, and then basically when the bull run starts, you start to see almost instant profit, instant gain, as your average price is usually very, very low. So it's usually a very good strategy for beginners. But what is the best crypto strategy? Well, there are many in the space. And as I said, Chris has actually done an entire article on this. Everything from hodling, a long hodl, the yields and staking strategies. But I'll leave Chris to talk about those in a little bit more. A combination of them. Dollar cost averaging is in here. Value investing is in here. Swing trading and all these various other things are also in here as well. So it's probably worth a bit of a read and jump into our Discord for a little bit more of the information and different strategies that we apply. But essentially, I think from a beginner's perspective and talking strategy, it's good to know where you are currently, what you would aim to be in the future, and actually thinking about, not just entering the market, but also exiting the market is also very, very important. So when it comes to buying in terms of the downward trends that we're in at the moment, or this corrective phase that we're in at the moment, then essentially what you're looking at there is dollar cost averaging into the market, and then you should probably dollar cost average out of the market as well. But again, I'm not a financial advisor. I can't give you financial advice, but I can give you lots of ideas and around different strategies that do actually circulate in the space. So why not check out the Patreon post that's also here. I'll link it into the description, but also jump into Discord, ask us some questions there as well. But I'll tell you what, I'll let Chris talk about one of the strategies that he really likes as well. So over to you, Chris.
Thanks, Nick. One thing that you forgot to mention mentioned was this was a strategy that we used during the 2020 bear market, right? We dollar cost averaged, and many people do this weekly, and you can set this up with exchanges where it does it automatically. You can just forget about it. Nick and myself took it to another sort of extreme, and basically in the bear market we just purchased on the red days, on the pullbacks, and ultimately you had fantastic success that way, right? And we're still in profit now. So you could have done the same in the previous bear market, rode it all the way up and all the way back down, and you'd still be in profit, which is fantastic, because each time you do this, you're just going to generate more and more money. That isn't the best way to do it, but ultimately what I'm trying to suggest here is it's a safer way to invest rather than getting into crypto in a bull market where most people would find themselves at a loss at this point. Now, I'm not going to get into a lot of different strategies, but I have done the write-up, as Nick mentioned. I will link the article in the description of the video. There are many different strategies, as Nick's mentioned, but one of the things that I do want to focus on is building additional tokens. So you've dollar cost averaged in. We're going to use Harmony as an example here. Some projects will allow you to stake, delegate, or yield additional coins, be this many different methods. We have a Harmony pool that we've built for our community to delegate to get rewards of between 9.3% and 10% on average per year on what you hold. So you can delegate and you can earn additional coins and tokens, which is a fantastic method during a bear cycle or bear market to increase what position you have. So interest rates have gone up, money's tighter right now with energy costs and all this stuff that may stop you from purchasing more. I really wanted to sort of touch on the subject of making your money work harder for you. So ultimately, if you haven't got money to invest right now because of the economic situation, ultimately you can stake or delegate or yield and generate increased number of coins or tokens than you already have, which is a fantastic way. And even if you can afford to purchase on a weekly basis or a monthly basis, this is still a fantastic way to increase your holdings. So I really wanted to bring this up. This is the 𝗕𝗘𝗪𝗰 pool. Check it out. We also have a Cardano ADA pool with the ticker 𝗕𝗘𝗪𝗰. Again, if you don't know how to do this, we have some tutorials on the channel, and do jump in our Discord and you can ask us questions and we reach out and we get back to everyone that contacts us, right? But ultimately, let's get into some more sort of things and that will support if you want to increase your bags. Now, one of the things that I really do like, and this isn't sponsored in any way, is the crypto cards. Now, we had a channel sponsor, which was crypto.com. They're no longer a channel sponsor, but I still like the benefits of some of these debit cards, right? And you do get credit cards as well. I'm not going to go through many of them, but I'm just going to highlight it too. So you've got the Plutus card here, right? Again, you can generate additional coins or tokens through just spending on your daily purchases. So I think this is fantastic. It's definitely something for you guys to go away and research and find what resonates for you. Obviously, Nick mentioned we're not financial advisors. This should be treated as educational purposes only. We can't advise you what to do and how to do it, but what we can do is kind of give you some ideas and pointers, and you can go away and see if that's the sort of stuff that you wish to do. But you've got Plutus here, but you've also got the crypto.com card as well. Again, we're no longer sponsored by crypto.com, but I do like the cards. I do like the passive earning potential that you get from these, and I think it's definitely worth investigating. So do let us know in the comments below what your thoughts and opinions are on everything that we covered in this video. Really interested to know.
Thanks for joining us in today's video. If you want to build a generational level wealth, then why not check out the Discord? Links in the description down below. It's a fantastic community supporting each other do exactly that. Build a generational level wealth.
Don't forget to subscribe, tap that bell, select all the notifications so you never miss a video, and mash the hell out of that like button. Let's do it.
Until the next one, guys, have a great day.